It may take a while for Michigan's dairy industry to rebound from several down years on the markets. But Chris Wolf with the Dyson School of Applied Economics and Management at Cornell University believes 2019 is the beginning of a recovery that will continue throughout 2020.
This has been the beginnings of a recovery. If you look at the average U.S. milk prices, we started off the year Class 3 and Class 4 in that $14 a hundredweight range, which is below, cost of production for virtually everyone. And then throughout the year, it's been kind of slowly gaining momentum to where we're at the point where November Class 3, as of close yesterday, was $19.10 a hundredweight, which is a very respectable Class 3 price on the strength of $2 a pound cash cheese prices. And so it's looking like there's some momentum on the dairy markets at this point in time for the first time in a while. Futures markets are projecting something in the $17.50 range for Class 4 and a little bit less than that for Class 3, maybe $17.20, 17 and a quarter. At the current time, that's given what we know at the current time, and lots of things can happen, weather events, trade disputes, other things like that. But I think that there's even still potentially some upside in the market. I think that we're due for a recovery year. We've had a lot of farms go out of business. In 2018, it was over 13% of licensed dairy herds in the state of Michigan went out of business. That's a lot. The long-term exit rate is more like 4%, so we're tripling that, and 2019 may be more of the same. We can only do that for so long before we need to start to see some recovery.
The state of Michigan continues to hold a place on the milk production per cow leaderboard. The USDA's National Ag Statistics Service reported earlier this week that Michigan dairy cows, on average, produced 72.2 pounds of milk per day during the month of September, almost 8.5 pounds more per day than the average across the 24 major milk-producing states. The question now becomes, can the state's dairy cows continue to be some of the most efficient in the country, with uncertainty about forage quality and availability?
Historically, milk production per cow increases 1.5% to 2% a year, kind of regardless of what seems to happen through management changes, through genetics, through nutrition, through other management changes. And it's kind of amazing. It's an amazing success story, I think, kind of how successful the U.S. producers have been in just increasing milk production per cow. I think there's going to be some real challenges in this next year as the forage quality and expenses change. We've had this past summer not great weather for forages in a large part of the country. It's been hard to get them off, and the forages that have been made have not been super high quality in a lot of cases. And I think that when we start to run short on forages and high quality hay that you need for a high producing dairy cow gets expensive, I think we're going to see a real effect potentially on milk per cow, and that's where it's going to show up in the milk supply response. Perhaps when we start getting into March, we're going to start to see that bite. Expenses are going to go up. High quality hay is going to be hard to find. There's already some situations where straw is getting more expensive because you can substitute that fiber to some extent in the dairy ration, and that's when I think we're going to start to feel it.
Wolf's comments were made October 23rd during the annual Michigan Agriculture Credit Conference, which brings together agricultural lenders, agribusinesses, and policymakers for updates on the agriculture economy in Michigan.